Alright, guys, so let's talk about three big topics today because we have the US denying one of the biggest global movements happening today, and that is the dollarization. Now, anyone who has been paying attention knows exactly what's been going on. The dollar has been getting hammered globally, and we aren't just talking about the strength of the currency. Now, I think it's really important we hammer this into our heads. We are now witnessing a structural change in the global order. The tariff war has literally rewritten the rules, and the USD is the main casualty. Now, so far in 2025, the dollar has dropped by nearly 11%. This is the second worst collapse in history since 1973, and it bears repeating why. Trade with the US is starting to slow down. The US wants to supply their own domestic demand. Fair enough, but that also means fewer dollars will flow out to the global economy. Global exporters will be getting less currency. Remember that this is a structural change. Trump is not going to change his mind tomorrow and U turn the entire trade war. And this is going to last at least for the next 3.5 years at the minimum. The problem with tariffs is how it destabilized the entire US economy, and we are beginning to see the daily effects. People have less money to spend, industries are starting to contract, and the private sector is getting hammered. US private payrolls are starting to shrink. Instead of gaining 100,000 jobs in June, the economy actually lost 33,000 jobs instead. This is a big problem because the US government is already starting to shrink. So now you have both the public and private consumption on the brink of collapse. This is the dark stretch we have been talking about. When Trump decided to embark on his tariff war, he forgot about one tiny detail. US supply chains just aren't fleshed out enough, and that's why costs are going up and people are buying less. Now, Trump's trade deals aren't done yet, not by a long shot, and his letters of ultimatum are about to go out.
Do a simple deal where you can maintain it and control it. You're going to pay a 20% or 25 or 30% tariff.
You brought in a record
And
amount.
we're going to be sending some letters out starting probably tomorrow, maybe 10 a day, to various countries saying what they're going to pay to do business with the U.S.
So you heard the rates. 10 to 70% tariff rates will be imposed on exports from the world. So on one hand, you have fewer dollars flowing out to the world, and on the other, domestic input costs are going to go up. And you know the dollar's strength is in trouble when Scott Bassett is actively telling us that everything's fine, it's not doomed, and it's important we sit up and pay attention to this one. Now, Bassett's definition of a strong dollar policy isn't what we all thought months back. It's a big gamble to ensure the dollar remains the reserve currency at the cost of higher inflation. Now, here's what he said: the price of the dollar has nothing to do with a strong dollar policy. And this is a critical statement, and he clarified it further in the next line. The strong dollar policy is what we are doing things over the long term to ensure that the US dollar remains the reserve currency in the world. And we have to decode what Bassen's plan is for the dollar. It's basically a big gamble. It might or might not pay off. But the US economy has been forced into a corner where there's no going back anymore. Bassett and Trump is hoping to crush the dollar long term in hopes of reviving the US export economy, and that will help make US exports more affordable. Now, the hope is after a few years, the world will start buying a ton of US products and the flow of dollars will continue. So it will remain the world reserve currency because in order to buy US products, you'll have to pay in dollars. But make no mistake, this is a gamble because supply chains are still fractured. In the meantime, the US trade deficit is starting to shrink. They are importing less from the world, so the amount of dollars flowing outside is starting to drop. Now, the goods and services deficit in June hit $73.1 billion, and it's down by $1.9 billion from May's figures. And when you have more dollars circulating within the US economy, this drives the value down. Now, we know Trump is going to impose more tariffs on the world. He has confirmed Vietnam's tariffs will be 20%. So the cost of shirts, shoes, and jackets sold in the US will rise by at least 20%. So more money from US consumers will flow to government coffers and people will be poorer for it. Consumption overall is still going to crash. But let's cover the second part of Bassen's de-dollarization denial. When asked about the yuan being a reserve currency, he dismissed it completely. They have a non-convertible currency. So how are they going to be a reserve currency? They have also 1.4 billion people who want to get their money out of China. And this is where we need to push back a little. China doesn't want the RMB to be the world reserve currency. The burden is just too big. But they are using the RMB to de-dollarize the world. Very different agendas here. Now, China is all about reducing dependence on dollar transactions. Replacing the dollar is a moot point. And when it comes to capital flows, money is actually flowing back to China. So I don't think Besson is being very truthful here. Now, speaking of big shifts, we need to talk about China and BRICS. And there's a lot of chatter about why President Xi is skipping the BRICS summit, and instead of him going, Premier Li Qiang will be attending. Now, Putin will also not be going. And there are 1001 ways we can speculate about it. It could be that China and Russia are planning something on the sidelines, or it could be President Xi working to counter US tariffs. We just don't know. So it's really hard to come to a direct conclusion. More likely, China has already a commanding presence in the bloc and the foundation has already been set. However, it's more important to realize how far BRICS have come, especially around bilateral trade. Their need to trade with the US is becoming smaller and smaller with each passing year. Now, before 2021, trade between the BRICS was tepid at best, less than $400 billion annually for 5 years. But look at the big jump since the Ukraine war. Trade spiked well above $740 billion according to the IMF, and BRICS knew that they have to trade more amongst the bloc, and that was way during the Biden administration. And now that Trump is in office and using tariffs as a weapon, the urgency for BRICS to work together is through the roof. It's important we also zoom out and understand the big energy transformation BRICS is undergoing. The future will be centered around chips and AI, that much is certain. But to power all the data centers, you obviously need a lot of electricity build-up. And this is where BRICS is going to easily surpass the West, especially in solar. Now, if we look at total solar build-out in the world, China is leading the pack with 830 terawatt hours. The US is in second place, but with only 300. It's a big difference that tells us who will win the chip war if China reaches parity. It won't even be close. Chinese suppliers will be able to force down the cost of production and win out any Western competitors. And as a whole, BRICS countries generated 51% of the world's solar power last year. And that's a huge amount that shows us who is actually in control of future technologies. China is also the top supplier of solar panels to BRICS members like India, Brazil, and the UAE. So the build-out is real, and when the time comes, we can expect China to start building chip factories within BRICS itself. Now, Beijing is helping them to build up their industrial base, especially when it comes to power generation. And they are building it at a discount. That's the main thing we have to understand. Now, while BRICS is building up their economies, it seems that Trump is also building something else up, and that's the US national debt. Now, by now, we know the US is $37 trillion in debt. It's horrific, and at today's high interest rates, it's going to spiral upwards just by itself. And in a stunning update, Trump has officially signed the tax and spending bill into law. Now, he signed it on July the 4th, which is very ironic. It's not freedom that he just signed, he just deepened the debt slavery. Now, this bill will be adding $3.4 trillion to the national deficit over the next 10 years. So imagine an extra spending of $340 billion when rates are still crazy high. Now, the problem here is who really wins from the tax bill. The deficit will increase to subsidize one group of people, while everyone else will pay the eventual inflation tax, which essentially destabilizes the US economy. And once you see this, you realize why asset prices are going to get hit higher. Not because the economy is great, it's because the rich, they're going to get richer. If we look at the majority of the costs, we can see who really benefits: the marginal tax rate cuts, the business deductions, the full expensing and state exemptions. And let's be frank, all these benefits the upper 1%. Now, I'm not saying that that's wrong, I'm not judging them, but there will be material effects for the rest of the US economy. Now, when rich people get more money, they don't really spend it on food and drink. Those are limited, right? They will use the money to buy more assets. Everything from stocks to gold will catch a bit. And if you think I'm joking, just look at the big disparity between the cost of the tax cuts and the actual savings in the real economy. There's no escaping reality for this one. In absolute terms, the tax cuts will cost the US a whopping $4.5 trillion. Those at the top will benefit the most, but the cuts to Medicaid and food benefits are over $1.1 trillion. And those are the categories that directly impact the low income earners to a big degree. So just picture the situation going forward. There could be less money sloshing around the real economy. As that inflation continues to rise, tariffs cause goods prices to stay high, plus critical services will also cost more. Now, I don't know about you, but this suspiciously sounds like stagflation to me. We are waiting for the unemployment shoot to drop at this point. I don't really want to keep harping on the tax bill, but it's really important to understand how this creates a bifurcated world. We might be in a situation where the dollar keeps going down due to the tariff war and crazy deficits, but real asset prices in dollar terms could continue to rise higher and higher. And according to the Yale Budget Lab, the bottom quintiles will be suffering the most. The bottom 20% will suffer a hit of $560 a year. Meanwhile, the top 20% will enjoy over $6,000 in additional income. But it gets crazier if we dig into the nitty gritty numbers. The top 0.1% will enjoy an incredible $120,000 in income every single year for the next 8 years at least. 6 digits, guys. So we now have an ultimate bifurcation building in the US economy. The rich will start to acquire more assets because Trump is making their lives better. There's no other way to say it. But in doing so, he's just increasing the inequality gap. This entire tax bill is just another form of trickle-down economics but packaged with the face of Donald Trump. Now, do I think this will work to revive US manufacturing? I doubt it, because the fundamental problem of supply chains has not been solved yet. But let me know what you think. Is Bessent lying about de-dollarization? And is the tax bill good or bad for the economy? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.